We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to talk about hot inflated markets. Now we're looking at a chart here which is the S&P 500. I've shrunk it down a bit so I can get the chart into the video screen. This is a monthly chart of the S&P 500. We know these peaks here. You've seen those. You see the breakout here. What we have, these three lines, this is because they are Gann angles 45 degrees. So Gann angles 45 degrees. That red line there is the 45 degree. The chart is squared, so I click on the top. Bang, bang, comes out at 45 degrees. Now to forecast future tops in price, you take prior peaks and you put the selection of Gann angles on there, and you can see here, for example, peak 1, forecast peak 1, peak 2 here. So at the moment we've got a channel where price is held. That's the come here. Sorry. Oh yeah, that's it there. That there is the supply line, or the upper channel line. This here is a demand line, right? If you can see that price action is coming through here. This is the channel we're in now. Alright, that's the supply line. The point is that I think we're going to have a situation where, I'll just draw a basic technical here. We've got a channel, and we got price. We've had price. Obviously price comes into below a channel, it's oversold, it stays within a channel, and it goes outside a channel. That's when it's overbought, comes back in, and might go down. So I believe we're going to be in that situation when price moves up to here. Okay, I'll just clear that. Whoops, get rid of that. Price is moving on the channel. I think we're going to get a breakout. It's going to come up here, and it's going to be above the channel. It's going to be overbought, and it's going to get up to that target point here, and that's going to be very interesting. And that is about 4100 on the S&P 500. So 4100, 4200. I think we're moving into this next area here. See how we've got these Fibonacci resistance lines. We've already gone through this one. We're hitting this one, and I think the major target here. Now, how are we going to get there? Well, quite frankly, that's the massive liquidity is starting to come in the market, overcoming the virus. Maybe Trump wins the election, and that's good for business. Biden would have done taxation. So be aware of that. I think we could have a rip up, and obviously what happens after that could be very interesting, because then we would have had consolidation, and really have another consolidation up here that's going to extend beyond. Would be a big, at the moment, a difficult thing to think about it. I'm going to scroll down to this chart here. What we have here is the RTT flow index. Okay, so see where it is here. It's got plenty of room to get back up to there. So everyone knows in the market about the bad breadth of the market. So my point is that the market still can be moved up, because here's the advance and decline index. It's made a new high. You can see that there. So there's plenty of liquidity out there. Here's the S&P 500. Excuse me, I just dropped the speaker, the microphone. Sorry. So yes, for example, here's an example. See how the S&P 500 has hit a new high, but the NYSE hasn't. If your a cup is half full, you think that's bearish and it's going to go down. But in the truth, there's plenty of room for stocks to go up, because others have not been brought up. I know the market's got up there in very few stocks because of the bad breadth, but if the breadth spreads, the market's going to go up. Why will the market go up? Because of massive liquidity out there that's going to find a place, and it's going to draw in all that scared money, because it's going to make new highs, and the best advertisement for stocks to go up is new highs. I think they call it climbing a wall of worry. Maybe we're going to call this one a climbing a wall of fear. Anyway, here's just a close-up. Okay, we'll scroll down past that. Now this is interesting. Cycles, are pretty true. Here's the top here, top there, the top there. So here's the top there. See, top. This top will cause a consolidation. top there, top there, top there, top there. So the big trouble is going to be here, which is late 2021. Now, I follow some pretty intelligent forecasting services, and they don't see any trouble for the next 2 quarters or next 3 quarters at the moment. Or they see GDP negative to rising, so that's like a 3-quarter recovery, a positive quarter in the third, positive GDP in the 3rd quarter. So this is all. I think for this to happen would have to have the US dollar go down to allow companies to compete overseas. So America is at the moment is suffering a demand collapse. I mean, like the rest of the world, but where they need to get demand from somewhere, and they're going to attract demand by lowering the US dollar, so more orders can come from overseas. And who are going to be the losers? Obviously, Asia and Europe. Right. Scroll down to here. This one chart. As you can see here, the black steppy line is the NYSE margin. As you can see here, people are borrowing more money to get into stocks. It's delayed because the data comes out a month late. But as you can see here, we're back to normal practices of loading up with debt. As you can see here on the blue line, see this blue line here, the price went up, but debt started to fall. So that was I gave a warning in the RTT Plus service. NYSE debt does not confirm price action here when that came out there. So at the moment, we have to watch the NYSE data, but at the moment we're looking at confirmation of the trend from the NYSE debt and also confirmation from the Advanced and Decline Index. So here's the Advanced and Decline Index here. The old high, new high. So there's plenty of money out there chasing stocks. And the point about it is there's a huge amount of money that institutions have loaded up in their money market accounts, and it's slowly creeping in as stocks go higher. And as the HFT machines, or whoever the machines are, pushing up prices higher, that will attract the scared money back into the market. And Jackson Hole, I believe there's going to be a speech on letting inflation run hot, and one way to protect yourself against inflation with fiat currency is to buy stocks. So I think we could have a inflation Venezuela, Zimbabwe, very, very light stock market. As we all know, Turkey stock market, Zimbabwe stock market, Venezuelan stock market went up 20,000% when they had rampant inflation. It's best to buy a producing company, a stock that goes up to protect your purchasing power. Now, I'm not saying it's going to be anything like that. I'm saying it's the same effect. If they're going to let inflation run hot, then stocks are going to be a home for money to hedge against inflation. Of course, all the usual friends, gold, silver, Bitcoin, Litecoin are going to do well. So thanks for watching. We're in a period, I would suggest, of the end of I'm guessing a blow-off. You get into a really oversold area, Fed-induced, inflation-protecting type market. So we could actually see a really hot market. All subject to a US dollar rally, because that'll be just reverse everything. But let's watch for Thursday and see what happens. Thanks for watching.